Every trader thinks their journey is different, different strategy, different market, different personality. But if you strip away the surface details, the psychological path is almost identical. There is a pattern to how traders evolve, and most people don't even realize they're moving through stages. They just think they're struggling or improving or getting unlucky. In reality, they're transitioning. The first stage always begins the same way, with excitement. You discover trading, and it feels like you found a hidden door. Charts are moving constantly. Money is flowing somewhere every second. You start watching videos, reading threads, studying patterns, support and resistance, breakouts, indicators that promise precision. You feel like you're stepping into a world most people don't understand. Then you place your first real trades. Maybe you win quickly. Maybe it's beginner's luck. Maybe the market is trending cleanly that week. But you see green numbers. And that changes everything. You don't just feel profit. You feel potential. You start imagining what this could become. If you can do this with small size, what happens when you scale? If you can double a small account, what happens with serious capital? The possibilities feel real, tangible, close. This is where confidence begins to grow. But it's not stable confidence. It's emotional confidence. You believe the key to success is strategy. If you just refine your entries a little more, if you adjust your indicators slightly, if you find the right time frame, you'll unlock consistency. So you test aggressively. You jump from one idea to another. You consume more content. You tweak constantly. At this stage, losses don't shake you much. You assume they're small mistakes. You assume the market just didn't cooperate. You believe you're close to figuring it out. But what you don't understand yet is that you haven't faced real pressure. You haven't faced a sustained drawdown. You haven't experienced 5 or 6 losses in a row. You haven't watched your account give back weeks of gains. You haven't felt your confidence drop sharply. Stage 1 feels empowering because the consequences haven't fully arrived yet. Your emotions are still controlled by hope. Hope that you're different. Hope that you'll figure it out faster than others. Hope that you'll skip the pain. But the market doesn't skip steps for anyone. Eventually, something shifts. Your strategy that worked stops working. The market becomes choppy. Breakouts fail. Reversals don't follow through. You take trades that look perfect, and they lose anyway. You feel confused at first, then slightly frustrated, then determined to fix it. So you adjust. You refine. You optimize more aggressively. You tell yourself that you just need to adapt faster, that the market is dynamic, that flexibility is the edge. But underneath that flexibility is uncertainty. You don't realize it yet, but you're starting to move into the second stage. The excitement begins to crack, and that crack widens when losses start stacking. Not just one bad day, a bad week, a bad stretch, a period where nothing feels clean, where your timing feels off, where your entries feel slightly early or slightly late. This is where optimism starts fading. And when optimism fades, psychology steps forward. The same trades that once felt easy now feel heavy. You hesitate before entering. You stop slightly because you don't want to be wrong again. You exit winners too quickly because you're afraid of giving profits back. You start checking P&L more often than the chart itself. You don't notice it immediately, but your focus shifts from execution to outcome, from process to money. That shift is critical because once your attention locks onto money, your emotional state becomes unstable. A small green move brings relief. A small red move brings tension. Your nervous system starts reacting to every fluctuation. You might not call it fear. You might call it caution. You might not call it ego. You might call it conviction. But your behavior is changing. You're no longer just trading a system. You're trading your feelings. And this is where the real journey begins. Most traders believe trading is about mastering charts. But the first real test isn't technical. It's emotional. When the early wins stop coming easily, when the market stops rewarding enthusiasm, you're forced to confront something uncomfortable. Maybe the problem isn't the setup. Maybe it's you. That realization doesn't happen all at once. It builds slowly. After each overtrade, after each revenge entry, after each moment where you break your own rule and regret it seconds later, You begin noticing patterns in yourself. After 2 losses, you feel urgency. After 1 win, you feel invincible. After missing a move, you feel FOMO creeping in. This awareness is the doorway to evolution. But it's also painful because now you can't blame ignorance. You can't say you didn't know better. You did. You just didn't execute better. That's the uncomfortable truth that marks the end of stage 1. You started with excitement, driven by possibility, but excitement alone cannot survive the weight of reality. At some point, you must decide whether you're willing to grow beyond it because the next stage doesn't feel exciting. It feels frustrating. And frustration is where most traders either mature or quit. Frustration is the stage that breaks most traders. It doesn't happen instantly. It builds, quietly. One bad decision at a time, one emotional reaction at a time, one broken rule that almost worked at a time. At first, you think it's just a rough patch. You tell yourself every trader goes through this. You tighten your focus. You promise to be more disciplined tomorrow. But tomorrow looks similar to yesterday. You take a clean setup and it fails. You follow your plan and still lose. Now confusion mixes with doubt. You start questioning whether the edge was ever real. And here's where things become dangerous. You don't just doubt the strategy. You start doubting yourself. Maybe you're not cut out for this. Maybe you're too emotional. Maybe you're overthinking. Maybe you're underthinking. The internal dialogue becomes louder than the market itself. This is the frustration stage. You still believe trading is possible. You still believe success exists, but you don't feel aligned with it anymore. You feel slightly behind it, slightly out of rhythm, and when people feel behind, they rush. You begin taking trades that are almost your setup, close enough to justify. You increase size slightly to recover faster. You enter earlier because you don't want to miss another move. You hold losers longer because you can't accept being wrong again. Each action feels small. Each deviation feels harmless. But collectively, they create instability. Your equity curve starts reflecting your emotional state. Up strongly on a good day, down sharply on a bad one. There's no smoothness, no rhythm, just volatility. At this stage, most traders think they need better timing, better tools, better insight. But the real issue is internal consistency. You haven't learned how to operate the same way regardless of outcome. Your execution changes depending on recent results. After a winning streak, you loosen discipline. After a losing streak, you tighten it emotionally. There is no neutral baseline. And without a neutral baseline, you can't build stability. This is the point where many traders system hop aggressively. They convince themselves that the issue is structural, not behavioral. So they switch strategies, they jump markets, they change time frames, they restart constantly. Each restart gives temporary relief, a fresh beginning, a reset button, a new wave of hope. But eventually, the same emotional patterns resurface, because the system was never the root problem. Your reactions were. Frustration has a purpose, though. If you stay in it long enough without quitting, it forces awareness. It forces you to look at your behavior objectively. You begin reviewing trades not just for entry quality, but for emotional context. Why D? I take this trade? Was I bored? Was I trying to recover? Was I proving something? That level of questioning is uncomfortable. But it's necessary. You start seeing the small decisions that compound into larger losses. The early entry that reduced your edge, the stop moved slightly lower, the extra trade taken outside your plan. You realize something critical. The market didn't violate your system. You did. That realization is humbling, and humility is the gateway to the next stage. Because once you accept that the biggest variable in your results is your behavior, your focus shifts. You stop obsessing over finding the perfect strategy. You start asking how to execute consistently. You reduce noise. You simplify charts. You cut down on inputs. You limit the number of setups you take. You define clear risk parameters, not because someone told you to, but because you've experienced what chaos feels like. You felt the emotional exhaustion of overtrading, the mental drain of constant switching, the stress of inconsistent risk. You no longer want excitement, you want stability. That desire marks the beginning of maturity. Frustration transforms into awareness when you stop resisting responsibility. You understand that drawdowns are part of probability, that losing streaks are inevitable, that no strategy wins all the time. And instead of fighting variance emotionally, you start planning for it structurally. You define maximum daily loss, maximum weekly exposure, fixed percentage per trade. You remove negotiation from your process because you've learned that negotiation invites emotion. You also begin separating identity from outcome. A red day doesn't define you. A green day doesn't define you. A green day doesn't validate you. You start measuring yourself by rule following instead of profit. That shift changes everything. You might not see dramatic growth immediately. Your stress decreases. Your reactions slow down. You feel less urgency. And less urgency creates better decisions. This is the bridge between frustration and professionalism. It's not glamorous. It doesn't feel explosive. It feels controlled. You begin to understand that trading success isn't about predicting perfectly. It's about executing consistently. And once you internalize that, you step into the next stage, not because you suddenly mastered the market, but because you finally started mastering yourself. Once awareness becomes real, everything slows down, not the market. You, you stop reacting immediately. You pause before entries. You pause before increasing size. You pause before breaking rules. That pause is growth, because in that pause there is space between impulse and action, and space is control. This is where structure begins to form. You define exactly what qualifies as a valid trade. Not loosely, not emotionally. Clearly, if the setup doesn't meet your criteria, you don't take it. Not because you're afraid, but because you've seen what deviation costs. You fix your risk per trade. You stop adjusting size based on how confident you feel. Confidence is no longer emotional. It becomes statistical. You trust your data more than your mood. You begin tracking metrics seriously. Win rate, average risk to reward, maximum drawdown, expectancy. Not to impress yourself, but to understand your edge objectively. Because you finally realize that trading isn't about guessing right. It's about managing probabilities. That shift from prediction to probability is massive. You stop trying to win every trade. You focus on executing your edge repeatedly. You accept that some weeks will be red, some months will be slower, but you don't panic. Your equity curve still fluctuates, but it becomes less chaotic. There are drawdowns, yes, but they're contained. Your behavior is consistent across different market conditions. You also notice something interesting. Trading becomes less exciting. There's less adrenaline, less emotional spikes, less drama. And at first, that feels strange because you were used to intensity. You were used to emotional swings. You were used to feeling alive during volatility. Now, things feel calm. Calm is unfamiliar, but calm is powerful. You begin thinking longer term. And instead of focusing on daily P&L, you evaluate performance over months. Instead of trying to double your account quickly, you think about protecting capital and letting compounding work. You respect risk more than reward. That sentence alone marks the transition from amateur to professional thinking. Earlier, your focus was on how much you could make. You create stopping rules. If you hit a daily loss limit, you shut down. No negotiation. If you hit a profit target and feel emotionally elevated, you shut down. No overconfidence. You remove emotional leverage from your environment. You reduce distractions. You stop consuming excessive trading content. You no longer compare your results to random screenshots online. You understand that comparison fuels insecurity. Your process becomes simple. Check the plan. Wait for the setup. Execute. Manage risk. Log the result. Review behavior. Repeat. The repetition builds confidence. But this confidence feels different from stage one. It's quieter. It's grounded. It's not based on hope. It's based on experience. You've seen your system perform across different conditions. You've survived losing streaks without blowing up. You've resisted the urge to overtrade. You've cut losses without negotiation. You trust yourself more. And trust in yourself reduces fear. At this stage, you start noticing that trading is less about the market and more about identity. You no longer see yourself as someone trying to make it. You see yourself as someone trying to make it. You see yourself as someone managing risk professionally. That identity shift is subtle but powerful. When you identify as a risk manager, your behavior changes automatically. You protect capital instinctively. You avoid unnecessary exposure. You don't gamble emotionally. You operate within structure. But there is still one more transformation ahead. Even structured traders can still be emotionally attached. They can still feel internal tension during drawdowns. They can still feel subtle ego during streaks. They can still feel a desire to outperform. The final stage removes that attachment. It's not about improving your system anymore. It's about detaching from outcome. You start realizing that profit is a byproduct of process, not the other way around. You don't wake up thinking about money. You wake up thinking about execution quality. Did I follow my rules? Did I respect my risk? Did I operate consistently? If yes, the day was successful. If yes, the day was successfulizes everything. Your emotional state becomes steady across outcomes. You can have 3 losses in a row and feel the same as 3 wins in a row. That neutrality is rare because most people are wired to react. But through repetition, discipline, and self-observation, you've trained yourself to respond instead. You're no longer fighting the market. You're no longer fighting yourself. You're operating. And when you operate consistently, compounding begins to feel natural. Growth becomes steady instead of explosive. You don't chase big months. You build stable ones. You don't try to impress anyone. You focus on sustainability. At this point, trading is no longer emotional survival. It's professional execution. And that sets the stage for the final evolution. Not improvement, mastery of self. At the final stage, something UAAIA happens. There is no dramatic breakthrough, no sudden explosion of profit, no moment where everything feels different overnight. Instead, there is calm. You sit at your desk the same way you've done hundreds of times before. The charts move. The candles form. The market behaves exactly as it always has. Uncertain, unpredictable, indifferent. But you are different. There is no rush in your chest before entering a trade, no surge of adrenaline when price moves quickly, no sharp emotional drop when a loss hits. There is awareness, there is structure, there is control. You no longer feel the need to trade every day. You no longer feel discomfort sitting out when conditions don't align. You understand that not trading is a position too. That understanding changes everything. In the early stages, trading felt like opportunity you had to grab. Now it feels like opportunity you evaluate. You don't chase it, you filter it. Wins feel normal. Losses feel normal. That emotional neutrality is powerful because when you stop reacting emotionally, you stop distorting your edge. You let probability play out. You trust your system across sequences of trades instead of judging it after one result. You think in batches, in cycles. In long-term performance curves, you understand variance deeply, not intellectually, but emotionally. You've lived through enough losing streaks to know they pass. You've lived through enough winning streaks to know they don't last forever either. There is balance. Your identity is no longer attached to your last trade. You are not a winner on green days. You are not a failure on red days. You are not an operator. You show up, you execute, you log, you review, you repeat. That repetition builds quiet confidence, not loud confidence that boasts, not fragile confidence that disappears after a drawdown. Quiet confidence that comes from consistency. You also know. Tice, something else. Money feels different. In the early stages, every dollar gained felt significant. Every dollar lost felt painful. The numbers carried emotional weight. Now, numbers are metrics. They matter, but they don't define you. Your focus is on risk-adjusted returns, on protecting downside, on preserving capital during volatile periods. You think about sustainability. You ask, can I maintain this process for years? That question alone separates elite traders from temporary ones, because short-term performance means nothing without long-term survival. At this stage, growth feels steady, not explosive, not dramatic, but steady. Your equity curve reflects behavior stability. It's not perfectly smooth. No real curve ever is. But the violent spikes are gone. The deep emotional drawdowns are gone. Your account no longer mirrors your mood. It mirrors your structure, and that is the final evolution. You started trying to master the market. You ended up mastering yourself. That realization is humbling because you understand now that the market was never the enemy. It was never the obstacle. It was never something to conquer. It was a mirror that showed you impatience, a mirror that exposed ego, a mirror that revealed fear, a mirror that revealed fear, a mirror that forced discipline. Every stage you went through was internal. Excitement taught you possibility. Frustration taught you humility. Awareness taught you responsibility. Structure taught you consistency. Detachment taught you control. Most traders never complete this evolution. They stay in excitement, chasing shortcuts, or they get stuck in frustration, blaming conditions. Few move into awareness. Fewer build structure, and almost none reach detachment. Not because it's impossible, but because it requires patience. It requires accepting slow growth. It requires giving up emotional highs. It requires operating without constant validation. That's hard for most people. But if you've reached this stage, you don't feel the need for validation anymore. You feel stability. And stability compounds. You don't wake up asking, how much can I make today? You wake up asking, will I execute correctly today? Because you know something simple but powerful. Correct execution, repeated long enough, creates growth. The final stage isn't glamorous, it's disciplined. It's consistent, it's professional. And when you reach it, trading stops feeling like a battle, it feels like a business. Calm, structured, repeatable. So now ask yourself honestly, what stage are you in? Are you still driven by excitement? Still wrestling with frustration? Becoming aware of your behavior? Building structure or operating with detachment? Wherever you are, that's your starting point. The goal is not to rush stages. The goal is to move through them consciously, because the hidden evolution of every trader isn't about strategy at all. It's about character. And once your character stabilizes, your performance stabilizes. That is the real edge, not secret indicators, not special access, not perfect timing, self-mastery. And when you master yourself, the market no longer controls your emotions. You control your behavior, and that is enough. That is where real trading begins.